Good afternoon, everybody. Good afternoon, everybody. Let me do everything I need to do. Make sure there's no echoes and no beeps. Right, do that. Give me a second here. Alright, hopefully that helps with that. And one other thing to do. And hopefully that makes it so there's no beeps. Alright. Hey, I am an associate member of T3 Trading Group, which is an SEC registered broker-dealer and member of FINRA. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. Well, I am blurry in the VTF, aren't I? I had my internet drop at 3:45. I don't know why the internet's been dropping in the afternoons. Maybe that catches up a little bit like it did yesterday. Otherwise, if the VTF feed is too blurry, the YouTube feed looks solid. If people want to cut over to that, I'm looking at both at the same time. When I first moved out to Idaho 2 years ago, I paid for both of the local internets because I was really concerned about my location on the internet not working well. So I paid for both, and it was unnecessary. One worked great, so I dropped one and kept one, and then that's what I had last year when I was out here, and it worked great all year. Never had any problems. And this year I've only been here for a couple of days, but there's been issues. So I'll give it a couple more days here, but my internet dropped at 3:45 today. I can't have that happen. And I do have some backup options here. I've got a what do they call that? A hotspot thing that I can connect to. But I might have to look into getting a second internet here again, like I did 2 years ago, even though I didn't need it 2 years ago. But anyway, let's jump in. Like I said, the YouTube feed looks great to me. So if the VTF is blurry, you guys can jump in on that one to be able to see a little bit better, I hope. So let's do it. So coming into today, first of all, our percentages. Market's down 1.1%, Qs are down 1.5%, IWM is down 1.1%. So market is down today. It's an inside day and down on the market. You can see that here pretty clearly on our daily chart. We've been in this consolidation now for like 12, 13 days. Real tight consolidation. We haven't been able to break up. We haven't been able to break down. We're keeping an eye on our levels to the upside and to the downside. If we break up, you want to look long. If we break down, you want to look short. And that upside is this 385 to 387.40. That downside is really like 378, I think, is a level, and then 375, or the area between 378 and 375. We did say in the morning meeting today that you could get a jump start on the short side of the market if the inside day breaks down. With that said, prior to 8:15 a.m., I was feeling pretty positive today. And the reason why I was positive, I mentioned this briefly in the morning meeting, although the market had really changed at 8:15 when that jobs number came out. Too many people are working. It really wrecked this market all the way back down. But the difference this morning was it has seemed to me like the last few trading sessions that the market itself and some individual stocks, a lot of names have been acting really well. And we've actually managed to have some pretty good long trades within this consolidation pattern here over the course of the last 12 days. You're looking at names like, Shopify comes to mind. Shopify got downgraded today, so that got hit pretty hard. But, this move up here from, 32.50 to, 37.50 was a nice move. We caught most of it, gave this nice inside day for continuation. So there's been a bunch of pretty good long trades that we've identified over the course of the last handful of days while the market has failed to break out. And the market has failed to break out because the most heavily weighted stocks that are in the market have been atrocious. Tesla, we all know what the story is with Tesla. Just really, really, really bad. One little relief bounce to new lows. Apple also just really bad, breaking all of 2022's lows, breaking massive support at that 129 to 130 level. Really bad. The Amazon daily chart has just been in this downward grind trend ever since they reported earnings last quarter, just grinding lower and lower and lower. Google looks pretty similar, just really weak, grinding lower, below $100. This thing, not really catching any good bids. So, whereas to me, like, under the surface of things recently, there were some things that I really liked. Financials were one of the things I really liked. Again, some of those growth names that we communicated worked out really well. But the market just hasn't been able to break out of the range. It has not been able to support any of those long trades. And the reason for that is primarily, again, because of these mega cap stocks kind of holding things down. So this morning I wake up and I'm seeing Apple up nicely. They announced yesterday when their earnings were going to be last night, and the thought process, I think, for the market, and you can see Apple here at like 5 o'clock. Look at this move higher in Apple at 5 o'clock yesterday. So I think that the thought process for the market was, well, Apple just made an announcement and they didn't make a warning, and that's great because they should be warning. Everyone's expecting Apple to warn. And the fact that they're making an announcement on when the earnings report is going to be, and they're not warning alongside of it, said, okay, maybe they don't need to. So the market, for Apple caught this decent little bid yesterday afternoon, and then pre-market this morning, when I was first kind of logging in around 6 something, this thing was working its way back up, and putting decent pre-market highs here. Obviously, the 815 number worked that down. So I'm like, wow, Apple actually looks decent. And even though the Apple daily chart is garbage, like we discussed in the morning meeting today, Apple could be a long or a short. It's technically a bearish pattern. It's really more of a short setup on the daily chart. But with that positive news, if it's an inside day and up, you could take the long as well. If that potentially gets above, 129, 130, that would be a better trade. Amazon was the next thing here. Amazon announcing those kind of additional layoffs. This thing caught a bit after hours. It was up a ton this morning. I'm like, wow, I got Amazon up a couple percent. I got Apple showing relative strength. Tesla was set to gap up above the inside day high at a certain point this morning. So I'm looking at the things that have really been holding this market down, and I'm looking at the inside day for the market yesterday, and I'm saying to myself, wow, we might actually get some support from these mega cap stock companies that could break this thing out to the upside. That's what I was thinking. And then 815 happened. Then the jobs number happened. And this has just been so consistent. I think it was yesterday too, right? The market was looking great yesterday, and then we got the numbers came out at 10 o'clock and it just kind of wrecked things back down. And the market was looking really, really good, and then 2 o'clock came out, the Fed wrecked this market back down. And then this morning, the market's looking really good. It just keeps looking like we want to go higher, and then an event happens. Once again, an event happened, and it wrecked this market all the way down. Whereas at 8 o'clock in the morning this morning, I was really planning on giving a morning meeting with a bullish tilt towards the potential of an inside and up and breaking out of this range, and maybe this market works its way back to 390 or 395. By the time 9 a.m. actually occurred, we were all the way down almost at the inside day low. And you can see where we actually opened here at 9:30. We had a gap down, so they wrecked us at 8:15 on that jobs number. We had a gap down, and then pretty much immediately we're having downside momentum. We broke that inside day low. We're below 380, and it was at that point that, I was basically saying that we should be really primarily looking at shorts, to be honest. Maybe I could have done a better job looking at other names. I also always want to be very cautious on chasing extension. So even though we're breaking below 380, and Bill Kay said it great in the VTF, he was like, I'm expecting this market to bounce back, and that can be an opportunity for me to short it. So I had the same thought process. That 815 number came out, it totally flipped the switch on everything that I was thinking about with the market at 8 a.m. And now the picture's completely different. We're set to break the inside day to the downside for the SPYs. The inside day for the IWM was pretty much broken instantly. The inside day for the Qs was broken right away. And now we need to be thinking more to the short side. With that said, whenever I'm thinking long or short, the extension rules always have to come into play. So before the short trade came in, and I did communicate this inside 5 and down here as a short setup, that we could go short the inside 5 and down, and that was, you know, kind of more or less off of what was the high of the day, though it didn't get fantastic follow through. I'm actually surprised. I'm surprised a little bit that we didn't resolve and follow through down even further. There were certainly some stocks out there that were extremely weak and did, but the market itself didn't. So we did call this inside 5 and down, but before that, we actually were looking for this oversold bounce to come into the market and looking for some short-term longs in things that might be relatively strong. And one of my favorite ideas, I know Rowan was all over this and Rowan communicated it, was Apple long. Apple obviously got wrecked also, was negative, but was still relatively strong kind of compared to the market. This was trying to give that tail first. So we talked about Apple long versus this low for a market retracement. And again, all you can expect is a market retracement. There's a lot of work that the market has to do to prove itself to be innocent again, where we can really be looking for longs. But for that market retracement, we could go after this Apple long. I know Meta was communicated as well. Meta off of this low for a long, and it gave a little bit of upside. I think I was looking at Shopify long versus this low. That turned out to be the long of the day, the low of the day. So that was actually a pretty good trade. I was involved in that one, and I was involved in the Apple trade as well. Sentinel got communicated here versus this hammer low again for a retracement. We also talked about booking profit into the ADMA. That trade eventually failed. The Apple trade eventually failed into the close. Surprisingly, Shopify, even with its downgrade, didn't actually fail into the close, but certainly weakened out a little bit with the marketplace. So we caught the oversold bounce, but the market's broken. We have an inside day and down. The IWM is leading lower. The dollar is stronger. Everything is looking bad, and this is where you want to be looking for your shorts more. Again, going back to kind of the big picture game plan with the market. You know, maybe I didn't have enough shorts on my list for us this morning. I mostly just provided names that were in play. The inside day here for this market, once we're breaking below that, you got no business really looking for those longs. I understand that we are in a range, so inherently when you're in a range, a lot of times it means that when the market looks the absolute worst, it means you should be buying, and when the market looks the best, it is the opposite. It's when you should be selling or short selling. You know, that was basically the signal. As we're breaking down, we're extended, we're looking for this retracement. And where do you want to look for the short? You want to look for the short really as soon as we get to the ADMA. This candle here at 10 a.m. was actually very encouraging because the first short I actually called out failed. The first short I called out was shorting versus the 955 high. We got right to the ADMA, we gave a little bit of a tail there, and I said you could go short versus that high. That could be a pivot high, and we could work our way down. The market actually did begin to go down a little bit, and then immediately tailed right back up on that 10 a.m. number and worked its way higher. Then at 10:05, the robots, the algorithms went completely wild. That's when that headline came out about a Russian truce. And at first, I think that's all the robots saw, and then we saw it was a truce for literally one day, and there's a lot of skeptics that are out there on even if that one-day truce will even actually hold. So markets went totally wild. They briefly upticked above the opening high and then settled back down. I was encouraged by the relative strength of the IWM at this time of the day. The IWM didn't tail back down as hard at 10:05 and was really holding in well over the course of this 10 a.m. hour. The SPYs and the Qs were much worse, and it was there that we called out for our next actual potential short trade here off the inside and down. And again, that worked. I communicated it more with the market than with any individual stocks. I guess that's one thing I should work on doing better. I tend to communicate long trades better in individual names and then short trades better in the indices. I need to try to do a better job of communicating the short trades in relatively weak stocks as well. You know, I get very focused on, and this probably has to do with my own trading. You know, we develop as traders based on our experiences, right? and my experience trading to the short side is I've had a lot of success over the years trading the indices to the short side, and I've had the worst losses of my entire career have always come from individual stocks to the short side. Just throwing that out there. So maybe that's part of why my approach is a little bit of what it is. You know, just so that's why I'm like very good and consistent, I think, on calling the individual trades as they come to the short side for the indices, but I don't do as good of a job with that for the market. And then on the long side, what I end up doing is not really calling out the longs on the indices as much, but seeing the long in the indice and then calling out the long for the stock, if that makes any sense to you guys. But yes, so that's something that I'll continue to work on. But that short, you know, kind of worked okay. Didn't give tremendous follow through. Some of these stocks got wrecked today, though. Completely wrecked. You know, CrowdStrike had that downgrade, so this thing was really weak all day. And, you know, CrowdStrike finished down 9% on the day. But if you look at, like, the Sentinel, they destroyed this thing like 12% in 7 minutes, bounced back to the EDMA, followed by new lows. Like, that was just absolutely atrocious. I know this, like, Path that I look at a lot, just down all day. Sumo, which I like a lot, just super weak today. And then Apple, despite giving that fantastic long trade off that relative strength there, this thing then totally failed us as well. This pivot at 10.15 was key, and that pivot failed. I even called out a long off the 10.15 low. That trade also failed. And then Apple was done for the day. It stopped giving us that relative strength at all. And for me, the big thing on forgetting about longs was when this pivot low here broke. There was still a chance when we had this inside and down that got communicated as a short sale that the market could give a higher low right here and then off that higher low work its way up back to that high. It did attempt to put in that higher low, gave a little bit of a bounce, and then that broke. Once the 10:20 a.m. low broke, and once Apple, which led the market bounce, failed to hold this pivot at 10:15, roughly at the same time, honestly, my day was more or less done at that point. You know, I had some thoughts on what this market could potentially do. It didn't do it, and that was it. Surprisingly, Bullard, who's usually extremely hawkish, came out with some initially dovish sounding comments, though I do think he kind of rolled them back a little bit later, that caused this market to rip higher here at 120. Completely unexpected. And we're looking okay here. First we were looking okay right here, and then we were looking, I thought, great actually at 220. You know, we get the rip higher in the Bullard comments. You're digesting that extension a little bit, but we're kind of retesting the 10 a.m. high. I need the 10 a.m. high to break in order for this market to become more bullish. I need that 10 a.m. high to break. We couldn't do it. We kind of held as resistance, but okay, it's a big move. Let's digest it. You know, at 225 here, we pulled back a little bit more than I wanted, but then you know what? We broke back up, and we even broke this high, and we're testing the high again. And I thought we looked fantastic here to try to give some upside continuation in the close. And then once 3 o'clock hit, it was just out the window. We just had red bar after red bar. This pivot low broke. Once this low broke, that you know, potential of an afternoon rally, if we could break the opening high, was just shot. And at the end of the day, we closed terribly. Honestly, we closed terribly. Inside day and down for the SPYs. Q's even worse. Q's looked terrible. Inside and down. There was just the NASDAQ names, and this is where I had my biggest hopes at, you know, 8 a.m. this morning, were the worst ones. You know, Amazon was so bad today. Amazon was up so much in the morning and then was just atrocious. Whenever the market was trying to bounce, Amazon had wanted nothing to do with it. Closed on lows. The daily chart in Amazon looks awful. Google, daily chart looks awful. It's testing this support here. It's another one. Could not catch a bounce. Could not catch a bid for anything. Microsoft had been one of the best ones. Had been one of the best ones in FANG. The downgrade wrecked it, and then Satya Nadella came out with some comments this morning that were also very bearish, and I actually think Satya Nadella's comments negatively impacted the entire tech space. I was looking at some of those other kind of software companies or software as a service companies that were extremely relatively weak today. I actually also think that, believe it or not, was related to some of Satya Nadella's comments. If anything, Microsoft is starting to get extended to the downside on the daily chart. But all these things look terrible. Things would held us down. The SPYs are inside and down. Be careful overreading the inside and down because we are still within the consolidation. I don't want to be too bearish until we see the whites of his eyes and we start to see the major levels actually break. And Pat's been saying for the last couple of days that everyone's got to have their short button kind of queued up for the market if those support levels actually break. But the Qs look terrible. And the IWM was also really not good. I guess this tail here is actually bigger than I expected to see for the IWM. So you know what? I'm actually going to retract my statement. The IWM here doesn't look too bad to me necessarily. Obviously, it's still within a downtrend, but it's not. This IWM does not look like it's imminently going to be breaking the consolidation of to the downside, whereas the SPYs honestly look like they're ready to about imminently break to the downside. We'll see if they actually do or not. I know we got another number tomorrow morning that maybe changes the script again, but for the most part, every number that we've seen just hits us down. And the NASDAQ and the tech names, they just look atrocious. The dollar was really bullish today. The dollar getting above the high from 2 days ago is certainly not a good thing for equity bulls. Getting above 28.16, it's a layer of probability that's against this market. There's still a bunch of resistance levels here, though, that we haven't gotten back above, but it's obviously not great. What did TLT end up doing? TLT had a decent bounce. I almost would have thought that would support tech stocks a little bit more, but maybe the bounce was more of a fear trade than anything else. So end of the day today, I don't know. We did have some pretty good call-outs today. The Apple call-out, some of the call-outs off of these lows, actually the 945 lows, were some of the best trades of the day. Apple long off that low, Shopify long off that low, a few others off that low were some of the best call-outs of the day. But and again, an okay short call-out basically off the highs. But at the end of the day, I'm a little bit frustrated from today's trading session. It was choppy, it was tricky, it was difficult. There was a couple okay trades that we were able to find for a little bit of cash flow. But for the most part, it looked like the names that we need to bounce to support this market could not catch a bid, and a lot of other things like were even starting to break down technically. So we'll see what happens tomorrow morning when we have this next number come out. Just, of course, continue to be aware of your key levels here for the market. If this range really starts breaking to the downside, which I think is starting to look a little bit more likely, be ready to have your short setups ready for individual stocks or the market as a whole. And then again, we haven't technically broken either, so there is still a chance that we could resolve to the upside. But I think that probability is deteriorating a little bit. Until we actually break down, there's still a probability that we could break to the upside. So we'll see how all that plays out. Happy to answer any questions that you guys have. I can take questions in the VTF, and I can take questions on YouTube. I got a bunch of screens. It's one of the benefits of where I'm at here in Idaho is I got a pretty good setup as far as my screens. So I got both the YouTube up and the VTF. I know that the VTF screen share here is a little bit blurry for some reason. So yeah, let me scroll up here in the VTF. Let's see what I missed. What's going on with PaySafe? PaySafe did a reverse split at some point. I don't know. There's a handful of these growth stocks that have been trading really well. What did DocuSign end up doing today? Oh, that Docu failed. Wow. Totally failed. I like DocuSign long today. It's one of the better looking daily charts I think that's out there, especially from these growth type names, and it got upgraded this morning. And they wrecked it. They wrecked it. So PaySafe is another one of those growth type names. They must have reverse split this. I think it was trading at like $2. It's trading at a higher price. So I don't know why. I don't know why the relative strength is what it is. It's really just kind of getting back into broader resistance from a bigger range. From Dave. I've never tried to trade events like the number coming out at 8:30 tomorrow or today, but I'm curious what the best method to do so is from a trade mechanics perspective. Do you ever use a stop order above and below where the market is trading right before it comes out, so you can get in super fast depending on what the move is, and then you trade whatever your fill is? Or is there a better way? Concerned with doing this due to lack of liquidity in pre-market? Yeah, for sure. I mean, you could, I guess in theory, do it in the indices pre-market. But just be careful because stop market orders don't work pre and post market, so you could get in trouble a little bit. I don't love the idea though of what you're talking about. Like, I don't know, let me put a buy stop 20 cents above and a sell stop 20 cents below just to be in the direction of momentum. And the reason why is that there is very often, just because of the robots, like a very quick false move. Like, look at I guess look at 10 a.m. yesterday or look at 2 o'clock yesterday. 10 a.m. gave this very, very quick tail up. This would have gotten you in on your buy stop just to actually have the move be down. 2 o'clock did the same thing. This happens a lot. I don't know if it happened at 8:15 this morning. I can check. I don't think it did. I actually think we just went straight down at 8:15. Yeah, we just went straight down. But a lot of the times you get this like quick move in one direction because for some reason the algorithms incorrectly digest it for a brief moment and then recognize what actually happened and bring the trade the way that it's supposed to go. And if you're just doing the strategy you're discussing, it can get you in trouble. So the way that I trade news is always versus that opening high low, and that inherently means I'm a little bit late. So I need to make sure that the news is significant, and I need to make sure I fully understand it. Part of the problems with the economic numbers recently is it's hard to say whether or not those economic numbers are even bullish or bearish for the market sometimes right now. Is good news again? Is good news bad news? Obviously this morning at 8:15, good news was bad news. I still, this joke is never going to get old to me. The gosh darn it, I can't believe all these people have jobs because they're bringing down the stock market. Let's get all these jerks to quit their jobs ASAP so the stock market can go down, right? I still get a kick out of that when we're talking about good news, bad news, good news, that entire kind of thing. So I have to really make sure that I understand the news so that I can kind of react. And then my stop loss is going to be the opposite side. So if I was trading the 10 a.m. number, the stop loss is just going to be the high. It's always going to be, my stop loss is when the market has negated the move. Now the next question though is it a good risk reward to actually take the trade? And then the answer is maybe. It kind of depends on what that news was, and that becomes much more subjective. So let's say I'm watching this market at 10 a.m. yesterday. I want to trade the news, and I see this market working its way down, and I can hit 382. My stop loss has to be this high. The high is 384.27. So by the time I'm seeing that, do I want to risk $2.25 on the trade? Maybe. The answer is genuinely maybe. It depends on how bad I view that news. The 10 a.m. number yesterday, I was like, I don't even know. Is this good news? Is it bad news? The JOLTS number to me was obviously bad news, but the ISM manufacturing number, I couldn't tell how the market would actually react off of that. JOLTS seemed bad though, and today was obviously bad at 8:15. So that one, you could have shorted that. It was obviously bad. That's one of the bigger things that the market is still really concerned about is the employment situation, we just immediately went down. So you could be short versus that high of that candle, the basically 384. And so with that said though, my preferred trade is actually not the initial news reaction trade, because that trade can be very difficult. It's the setup that comes after. This is a trade that I love to the short side. You get the initial reaction of the downside. What does that do? It makes the stock market, for the SPYs here, extended. The market's extended, right? Fast move. What happens? 10 minutes of rest, tightening. It enables the 80-MA to catch up. This is a bear flag. It's also 2 inside 5-minute bars in a row. We call that a shooter, a 5-minute shooter. This is a great short continuation setup here. And then you short the break of the second inside 5 right here. The risk on this is super small. You short through 382.59, and then the stop loss is 382.87. Like really tight. That's an incredible trade. If anybody did it, and then another bear flag comes in. So that's my preferred trade. Is actually the setup that comes for continuation or reversal after the news actually hits. One other thing I used to do though, just kind of, and you just put it in my mind, I don't really do it anymore. I had, to be honest, I had mixed success with this trade when I used to do it, but I think I made money on it overall. One thing that I used to do before like a Fed meeting, and you would still sometimes kind of get shaken out with a similar situation as to what we described if you just put a buy stop in or a sell stop. Sometimes what I would do is I would kind of gamble, but it would be a gamble where the odds were in my favor, basically. So just to use the 815 today as an example, we know a number is going to come out. Assume that number is going to be significant, because this trade will not work if the number is not significant. Assume that trade is going to be significant, and then the move is going to be significant, I should say, in one direction or the other. What I used to do was, let's say we're trading it at 384, number's about to hit, the Fed number's about to hit. I might just take a shot, long or short. Maybe I'll just buy a bunch of stock right here at 384, and then I would just put in a tight stop. Whatever this last low here is, 383.54. I'll put a stop right there. I'll risk 45 cents in it. The idea being, if the number is really good, the move I'm going to get to the upside is going to be much more than the risk that I just put on. If the number's bad, I'm going to be getting stopped out, before you can blink. But that's fine. I'll be out of the way. I'd be out of the way at, 380, 83.50. I lose 50 cents, and I'm not, stuck long for this initial move, which is another $1 plus, let alone the follow through on that move, which brings you all the way down to 379. So I used to do that trade. And it would be like total guess. Oh, I'll go short. Oh, I'll go long. I would experiment with actually going short and long at the same time. I'd buy some stock in some names. I'd short some stock in others. I'd put some tight stops in either direction. If the market rips up, my longs would pay me, and the shorts would quickly stop me out, but the risk reward would make sense. And then the opposite true on the downside. The problem would be, again, when you get the fake tick. Like going back to the 10 a.m. number yesterday. If I did that on the 10 a.m. number yesterday, where I'm, right before 10 a.m., let me put some shorts out, let me put some longs out, let me put some tight stops out on either side. This quick uptick would have stopped me out of all the shorts, and then this quick downtick would have stopped me out of all the longs. I would have lost money on both sides of it. So, sometimes it would work really well, like today, if you happen to do it, it would have worked really well. You would have gotten stopped out of your longs very quickly. The shorts would have followed through, and they would have totally paid you significantly more than what you lost in the longs. That's the idea on how it should work. But when you get this type of situation where you get a quick tick in one direction and followed by the real move in the other, which happens a decent amount of time, you could potentially get screwed on both sides. And then you're just left with no stock because the market's working its way down and you just took a loss on a long and a loss on a short. So I'm not recommending trying that. You can play with it a little bit if you want. Play with it on some small stock. That idea. I used to do it in the past. I don't do it anymore. That probably tells you something in and of itself. And that's also broadly how I look to trade news. And the key is if the market negates that news or not. From Toussaint, what happened at 120? Was there news? Yeah, that was the Bullard's comments. Neon Cooperman, bank stocks are cheap right now. My aggregate position in banks is roughly 2%. I agree with him on banks. I like these financials a lot. I think that they're really cheap. Even if you compare like a Bank of America versus a PayPal, obviously PayPal is a growth story, but I think that PayPal, even at these prices, is still trading at like 18 times. I think Bank of America is trading at 11 times. And I mean, these banks are just cash producing machines, but they have those lower multiples. From Mark. Now I'm slightly bearish on oil if we're going into a recession or a slowdown. Any thoughts on Chevron, Hess? They still look okay to me. Sure, so I've gotten much more bearish on energy as well. They're definitely letting the technicals play out on that. 88's been a good consistent short. Obviously, your thesis here definitely hinges on what the recession looks like, how bad of a recession we actually get. But I totally get it. Yeah, I totally get it. So I've been liking these energy names a little bit more to the short side. But then again, you have a day like today where it was the strongest sector in the marketplace. Chevron and Hess specifically. Chevron looks similar to the XLE. So as long as it's holding below that 180, I think you can lean short. Gets above 180, you got to pull away. Hess is a little bit better. I think that equivalent is like 142.50. You can look to be short, as long as it's holding below 142.50. If it gets above, you got to be a little bit more cautious. Some of these other names, though, like Halliburton, honestly, this chart looks like pretty good. Like some of these producing type names, Rig as well is almost kind of highs. So if you're shorting, I prefer more of the XLE, Chevron, Exxon type of names, or even shorting oil itself. Honestly, like what we've seen a lot is the energy stocks outperforming energy. A lot of that, especially if you look at nat gas right now. Nat gas is wrecked. That's massive volume today. Oil, has certainly underperformed how those energy stocks have performed, and obviously the reason for that is because they're shorter duration cash flowing equity assets that have dividends, and I think that a lot of these companies have actually really improved their business models as well over the years with what they're doing with the cash that they're bringing in. They're returning a lot more of that to shareholders in the forms of buybacks, which is obviously really good, and the dividends are coming back as well. So yeah, at XLE I've liked to the short side kind of broadly. I missed the trade. It worked. There were several trades there. I missed them. We communicated them. I missed them. So for the moment, I'm kind of just hands off a little bit on energy. But I totally get the thesis and the thought process on it. But, you look at the jobs number today, and the one thing I said in the morning meeting, even though I know, and I said it like right at 8:15, even though I know that the jobs number coming in strong like that is one of the worst things that can happen to the market. Like right now, the jobs number is the ultimate good news is bad news, like probably more than anywhere else. But if, and it's a big if, and Bullard seemed to hint at this today, it's a big if the inflation can keep coming down and the jobs market can remain strong, that doesn't sound too bad to me. That sounds like a soft landing. That doesn't sound like much of a recession at all. And if you read Pat's note this morning, I thought it was really interesting that one of those, yield curve economists, and obviously the yield curve is like 9 out of 9 on, calling for recessions, actually said that he doesn't think that this one's going to lead to a recession, which I thought was really interesting. I would argue that we're already in a recession. It's just a very mild one. I am still a stickler of the definition that 2 quarters in a row of declining GDP is a recession, but it's just been a very, very minor one because everyone's working. Everybody's working, everybody's spending, everybody's happy. I don't know if everybody's happy, but everybody's working, everybody's spending. We know that. So yeah, I hope that helps, Mark. From Rex, could you talk a little bit about how you would trade a pivot? Oftentimes a pivot would still get broke down a little bit and then come back up. I tried to long Apple at the open this morning. When it broke yesterday's close and came back up, it failed. It broke yesterday's close and came back up. So I don't see that in the chart. I think I remember, and I might have even communicated it while this bar that closed atrociously was still open, that at a certain point it was trying to show relative strength and trying to pivot back up. I might have even communicated that, and it failed, if I'm remembering correctly now. But that's how you trade it. I mean, you look at relative strength, you see if the market can give you a bounce, if the market can be on your side, and you go long versus the pivot. And whereas that one might have failed and you lost your risk, this one that we communicated worked fantastically well. And that's where risk-reward comes into play. You should be able to structure your trading in such a way where you can be wrong 4 to 5 times and still make money. Screen became unblurry for a moment. Looks like it's blurry again on my end. But you want to be able to structure your risk reward, and obviously not every trade that you take, even when they work, kind of give you the maximum reward that you're looking for. Sometimes trades work and then they eventually draw down and fail. That's actually what happened with Apple. Apple gave a great initial move. It eventually drew it all the way back down and failed. But if your trades are really good and they're working, then you want to be able to try to have your reward in such a way where you can withstand multiple losses. If the pivot you're looking at fails, that next one that works is more than making up for it. Then you were long at 127 at the 10:15 pivot. Yeah, so I actually also think, and I'm sorry that you were in this trade and not this trade, but maybe that's a consistency issue. I really like this trade also. I actually really liked this trade, long off the 10:15 low. That was my idea. We talked about it already in this afternoon meeting. Apple was saving the entire market at 10 a.m. today. Apple was up pre-market. Apple's above the opening high. It's extended here at highs. That's what do stocks do when they're extended? They give technical pullbacks. But that pullback, in the same way that shorting the market on its retracement higher here is a great opportunity, buying Apple here is a great opportunity. And I really thought that Apple, if this thing started improving, it almost seemed like it was saving the entire market, to be totally honest. Was that Penny earlier today who said that she's going to go buy a new iPhone tomorrow if Apple saved the market today? Unfortunately, they tried but failed. This was the strongest stock that was out there. It pulls into the equilibrium area. It gives a nice tail into this. I love the idea of going long off of this low. Really do. I was involved in Apple myself, and unfortunately it failed within 15 minutes. But, it is what it is. Trying Amazon at 940. Is that where the market pivoted? Some next candles where the market pivoted. Was Apple the 940 low? Yeah, Apple was the 940 low, and Meta was the 940 low. The relatively strong names. Oh man, you're killing me, Rex. I feel bad. I love this trade. I don't want to say I love this trade. I like this trade also. I like this trade for the same reasons that I like the Apple trade in that spot. For the same reasons why we like the Meta trade that somebody communicated in that spot. Relative strength. If we're at a spot where we expect that the market can bounce, you want to be looking for stocks that you can believe are relatively strong to be the ones that you're buying for the bounce. That's why Apple worked so well. Meta worked okay. Amazon completely failed. Amazon's relative strength was a fake out this morning. Amazon was so relatively strong pre-market this morning that's why I like the idea of this being one of the names that you could choose to go long versus 940. The other relatively strong names held that low. This one didn't. Why didn't it? Because it became relatively weak. The market, pre-market, was like, hey, we love this news. They're laying off more people. And then basically the rest of the day, Amazon was actually one of the most garbage stocks that you could find. Every time the market was trying to bounce, Amazon wanted nothing to do with it. And that's what kind of caused that trade to fail. So look, generally, I think that you are on the right track with these three trades that you were involved in today. To be totally honest with you, you're looking at the right things as far as relative strength goes, the timing of a potential market bounce coming in. We do also have to recognize that the market was really never on our side, right? All we were looking for and expecting near these lows was a retracement back into this equilibrium zone as a short setup, right? So we do need to recognize that. Counter trend trades are always going to be more difficult than with trend trades. Whether that's a counter trend long or it's a counter trend short. And by the way, that's another reason why I really like this Apple trade here at 10:15. This is not a counter trend trade at this point on this time frame. Big picture, it obviously is. You do still have the market going against you, so you can't characterize it as an A+ trade. There's layers of probability against it. The daily chart of Apple's against it. You're buying the stock below support. Usually you don't want to do that. The market's against it, but the stock is strong. The stock that's out there, it's above the opening high. It's giving a technical pullback into equilibrium. So again, I like the trade. It's just not an A+. But generally, these more with trend type of trades are going to be better and easier than the counter trend ones. Even the Apple off of its lows is a more difficult trade, I think, in some ways than this Apple trade is. And again, if you just had the daily chart support, if you had the market support, it would be a significantly better trade. So recognize though, all the trades that you're communicating here in the afternoon meeting are trades that I like, but they're all trades that are difficult. I could go for a market one of these days where we have more clear trend, which we don't. We've been in a consolidation for 12 days, where we have more clear trend and we can actually look to purchase continuation hammers and expect to have success from them, or short continuation shooting star candles and expect to have continuation and success from them. So I hope that helps your thought process there, Rex. Don't get discouraged. Keep up the good work. So you really have the right thought process, I think, with a lot of it. Snow, you're 130 short. I think it was a tough trade. It's a momentum trade, but this is what I'm talking about. They wrecked these types of names today. These types of names got destroyed today, even as the market kind of held in a little bit okay. I feel like it's got room to the downside to below $100. How would you feel about a short if it pops to 125 or fails 120? At this point, it's difficult to gauge the risk from previous levels other than 130. So tight stop 50 cents is what I'm thinking for tomorrow if it's another bearish day. So tomorrow, the shorting through 120 is, I think, not a good trade tomorrow, to be honest with you. I don't like shorting day 4 to the downside when you're this extended. Like yesterday in the afternoon meeting, we were like, oh, 130, it'll be a little bit extended, but you could still take it as a pure momentum trade. Where if it's weak and there's momentum like there was today, the trade can still pay you. Tomorrow on day 4 at 120 with an ADMA at 134, I want nothing to do with that short. That short's extremely difficult, and if anything, you can look for the oversold bounce to potentially come in. The trade I prefer is more of what you're discussing, a bounce back pivot high that you go short versus. I don't think 125 is enough. Not with an ADMA at 134. I think this thing's going to need more time to correct through price or time to give you your next short setup. Be careful falling in love with a name that you have success in. And that's just kind of a broad general warning, I think, to everybody. Because I've seen that happen with traders before, especially traders at the entry level. They trade Caterpillar on day 1. They make money trading Caterpillar. So then their thought process is that they got to trade Caterpillar paid me. This is my stock. So they trade it every day. Every stock does not give a setup every day. The way that markets work is that setups have to build out. And there are periods of time when a setup is building out that therefore there is no setup and therefore you shouldn't be trading it. And then when the setup comes together and you're patient, that setup actually comes together, that's when you actually want to really go for it. So just be a little bit cautious. I've seen this hurt people in the past. Being overly married to a stock where you feel like you need to trade, that name every single day. Because this has given a couple of great shorts, I think, a couple of days in a row. I'm not sure how well you caught them. But I think, trying to short through 120 tomorrow, I think is a low probability of success and a bad risk reward. And even a bounce back to 125 after this big of a move, it went from 150 to 121 in 3 days. I think you're going to need more time than that. I think 125 could easily shake you out on it. So I don't love it. Francisco, Datadog, the bear case for Datadog. Important. They wrecked these stocks today. I think off of the CrowdStrike downgrade and off of the Microsoft, Satya Nadella kind of broader tech warning, these names got just totally destroyed. Snow, Datadog, obviously CrowdStrike, Sentinel that I mentioned earlier. They killed these names today. Important break is 68. Looks like 45 comes next. How would you play it? So 45 is a big call. A really big call. Hasn't seen that number in a long time. Doesn't mean that we can't get there, especially in a bear market and a relatively strong stock. This thing has totally broken through its recent support levels at $68 that you were just kind of mentioning. So the chart looks atrocious. It looks like lower, but it's similar to snow. This thing just went from 75 to 63 in 3 days. Volume is maximizing. You're, $7 extended in a $60 stock. That's a lot on a percentage basis. So how would I play it? what you're describing here, retest to 68. I like that. A bounce back, price correction higher as the ADMA catches up over the course of a couple of days could give you the next, short setup to come in. I wouldn't just, chase it through 63 on the downside tomorrow as an example. I don't think that's a good risk reward or high probability of success. Similar to what I was just saying, let the next setup build out. Let it come to you. And maybe that next setup is a testing of previous support to see if it holds as resistance. From Alonzo, hey Derek, do you trade gaps? And if so, how is gap trading in this market? Yeah, so gaps are huge. They're a huge part of my approach. They're a huge part of my daily strategy that I'm implementing every day. I have an entire class on gaps. If you have access to my classes, I definitely recommend checking it out because it discusses specifically how I trade them. The daily gap that the market gives every morning with a gap up and a gap down is awesome because it creates opportunity for us. It's what helps enable price, what's the term I'm looking for? Price discovery off the open. It's what creates those bigger moves. So yeah, gap analysis, the type of gap that we're dealing with, is really important to understand every day. So I do trade gaps, but I don't directly trade them. So I don't just look at this gap and say this has a higher probability of going down because of the type of gap it is, and I'm short. Because that doesn't meet my definition of a trade. The definition of a trade is something with a technical reason, a technical out. So you could say a common gap higher, market has a common gap up, or honestly even today. Today the market had a common gap down. It was technically a common gap down. You could say today it's a common gap down. This gap has a higher probability of being filled than giving continuation. That's an accurate statement. That's the type of gap that we're dealing with. Higher probability does not mean 100%, right? There's a lot of other factors that are going to affect whether or not a gap gets filled in an individual day. This one, while it did have a higher probability of being filled because of the type of gap that it was, did not. So I don't just look at the gap in the morning and say, well, this one has a higher probability of being filled, so I'm going long. Because it's not a trade. The definition of a trade is something with a technical reason and a technical out. You could certainly argue you have a technical reason. Common gap down, common gaps tend to get filled with a higher probability than giving continuation, therefore I'm going long. What you don't have off of that is a appropriate technical out or technical stop loss. So what I like to do is I use gaps more as a layer of probability. Generally, that's not always true. So a lot of times I like to use gaps as a layer of probability. If I expect that there's a higher probability that this gap can get filled higher, and I find a long in a stock, therefore that's a trade that I want to take because the market should be able to help it. That's more of how I think about it. There are some exceptions, like a breakaway gap can be a trade, but really a breakaway gap is, if it's to the upside, it is going long off of support. Is really all you're doing. Really, technically, it's previous resistance, which you expect to become future support. So you could say, oh, that's a breakaway gap trade. It's got technical reason and technical out. But I would argue it's actually a support trade that's being brought on by the gap, if that makes any sense. And Alonzo, I don't know how long you've been in the room here, how long you've been following along. I'm a real stickler to my definitions. My definitions are really important to me because my definitions are where the root of my trading approach is in those definitions, and it's what enables me to be consistent as a trader. Is that I'm always very, very focused on what my rules are, following those rules, being consistent with those rules, making sure I'm not deviating from them. Sometimes to a fault. Sometimes I feel like there's definitely been times, not that this happens too often, but there's definitely been times where I've almost felt like I'm doing something here that might cost me money, or that could easily cost me money, but I'm doing it anyway because I have to be consistent. And I would rather do something and maintain the consistency and have it cost me a few dollars than lose my consistency and then have no continuous approach to trading, because I know that's a recipe for failure. And I'm seeing we got a question here on YouTube, which I got up at the same time from Tuco. How do you stay away from getting in the 205 spike in the SPY, or is this something you can't avoid? The reason I'm asking is because I took it, the 1005 spike. I mean, that's hard. So first of all, you got to know what's happening there. So we saw like very quickly that there was something related to Russian news. I don't just react. So this kind of goes back to what I was saying in yesterday's afternoon meeting about reacting. I used the term in yesterday's afternoon meeting on reacting to price action, but I really needed to define it, because generally that idea of just reacting to what you see in the market is actually a really bad thing. And it goes back to a little bit of what I was just talking about having consistency in your approach, which requires rules and everything. If you have consistency in that and you're following rules, you're not just reacting to a random uptick that comes in at 10:05 because some algorithms are going crazy on some news that turned out to be super insignificant. Because it's not going to get you involved. The type of reaction that you need to be able to have is, oh wow, my trade is here and here's all the layers of probability I need to be in right now. Like that's the type of reaction that you need to have. Not just like the market up ticked them long, market down ticked them short. Like that's not going to lead to any consistency. So for me, at 10:05, when I see that spike come in, I'm like, oh wow, this is interesting. Oh wow, Russian truce, this is interesting. Oh, and then very quickly we saw it wasn't great news. But I'm also saying to myself, is there a trade setup? And the answer was no. There was no trade setup here at 10:05. We're in an awkward spot for the market. We're below opening lows. We're in a weakish market, but we traded back higher than we should have for a market that's breaking down and getting below 380 and having an inside and down, and this news is maybe helping, but there's no actual trade setup that I see here. So there's no trade setup, I can't just buy stock. And that's what helps me avoid being involved in that. The trade setup was here, 1010. This inside 5 after this bigger bar with the news, that's the trade setup. If this inside 5 breaks up, you're breaking the opening high, the market's confirming that it likes this news, even if it's not real news, but you're getting the confirmation from the price action, you buy the break of this inside 5. If this inside 5 breaks down like it did, it's very shortable. Market is bearish, it retraced back into equilibrium, fine, there was this wackadoo spike over news that doesn't matter, here's an inside 5 and down in a bearish market that can be shorting for continuation. So, I hope that helps to go. Alright gang, I think we covered everything. I'm going to wrap it up for tonight. Tougher day for me today. I hope you guys were okay, but it's how this business works sometimes. So I will see everybody tomorrow morning. If you're watching on the YouTube, you know what to do. Hit the thumbs up for me. I appreciate it. Hopefully my internet's on point tomorrow. Have a great night.